Non-integrated accounting system flowchart. Administrative overhead is assumed to be related with production. Integrated or integral accounting system. The main advantages of integrated accounts are as follows. A. No need for reconciliation. The question of reconciling costing profit and financial profit does not arise, as there is only one figure of profit. B. Less efforts due to use of one set of books. There is a significant saving in efforts made. C. Less time consuming. No delay is caused in obtaining information as it is provided from books of original entry. D. Economical process. It is economical also as it is based on the concept of centralization of accounting function. Features of integrated accounting system. A. Complete analysis of cost and sales are kept. B. Complete details of all payments in cash are kept. C. Complete details of all assets and liabilities are kept, and the system does not use a notional account to represent all impersonal accounts. In non-integrated system, a cost ledger control account or general ledger adjustment account is used in cost ledger. In this system, general ledger adjustment account is eliminated and detailed accounts for assets and liabilities are maintained. In other words, following accounts are used for general ledger adjustment account or cost ledger control account of non-integrated system. A. Bank account. B. Receivables, debtors, account. C. Payables, creditors, account. D. Provision for depreciation account, etc. In integrated system, all accounts necessary for showing classification of cost will be used, but the cost ledger control account of non-integrated accounting is replaced by use of following accounts. A. Bank account. B. Receivables, debtors, account. C. Payables, creditors, account. D. Provision for depreciation account. E. Fixed assets account. F. Share capital account. Reconciliation of cost and financial accounts. Items included in financial accounts only. A. Purely financial expenses. 1. Interest on loans or bank mortgages. 2. Expenses and discounts on issue of shares, debentures, etc. 3. Other capital losses, that is, loss by fire not covered by insurance, etc. 4. Losses on the sales of fixed assets and investments. 5. Goodwill written off. 6. Preliminary expenses written off. 7. Income tax, donations, subscriptions. 8. Expenses of the company's share transfer office, if any. B. Purely financial income. 1. Interest received on bank deposits, loans and investments. 2. Dividends received. 3. Profits on the sale of fixed assets and investments. 4. Transfer fee received. 5. Rent receivables. Item included in cost accounts only, notional expenses. 1. Charges in lieu of rent where premises are owned. 2. Interest on capital at notional figure though not incurred. 3. Salary for the proprietor at notional figure though not incurred. 4. Notional depreciation on the assets fully depreciated for which book value is nil. Procedure for reconciliation. Ascertainment of profit as per financial accounts. Ascertainment of profit as per cost accounts. Reconciliation of both the profits, similar to the bank reconciliations, accounting for management information and cost control. 1. Single plan. 2. Partial plan. Single plan. Under this system of management accounting, the variances in costs from the set standards are reported at its happenings without waiting for books closing. Timely analysis is done so that much time is not lost in taking corrective action wherever needed. Scheme of entries. 1. Material control account. Debit. Material price variance account, debit. Actual cost greater than standard cost. To creditors or cost ledger control account. To material price variance account. Actual cost less than standard cost. To work in progress control account. Debit. Material usage variances account. Debit. Actual usage greater than standard usage. To material control account. To material usage variances account, actual usage less than standard usage. 3. Wages control account. Debit. Labor rate variances account. Debit. Actual wage rate greater than standard wage rate. To cash/cost ledger control account. To labor rate variances account. Actual wage rate less than standard wage rate. 4. Work in progress control account, debit. Overhead expense variances account, debit. Actual overhead greater than standard overhead. To overhead expense control account. To overhead expense variances account, actual overhead less than standard overhead. Partial plan. In the partial plan, variances are analyzed at the end of period. Under this method, the work in progress account is charged at the actual cost of production for the period and is credited with the standard cost of the period's production of finished product. Recapitulation. 1. Current standards are used in both the systems. 2. Under the partial plan, material stocks are carried at actual cost whereas the same are carried out at standard cost under the single plan. 3. The work in progress and finished goods are valued at standard cost under both the methods. 4. Computation of variances. A. In partial plan, material price variance is computed on material used in finished goods and work in progress, whereas in single plan it is computed on the material quantity purchased. B. The partial plan is suitable where simple analysis of variance is sufficient at the end of the period, whereas the single plan is preferred if frequent detailed analysis of variance is desired, as a. The comparison of actual with standard cost of each operation or operator, or b. The daily reporting of standard cost of excess material used. Thank you.